Welcome to episode 7th of the Offshore Accountant podcast. Today we have yet another special guest with us today. He is Mr. Sanjay Kumar, who is ex-partner of Deloitte. He also worked as commissioner for transfer pricing, and he's a transfer pricing expert. We welcome you, Sanjay sir.
Thank you very much.
Sanjay sir, because you are a transfer pricing expert, I would like to start with, because many of our viewers may not understand what transfer pricing is. Maybe we could start there. What is transfer pricing?
In the world, multinationals work in various countries, and many of these subsidiaries or whatever they open, they would be related to each other, right? And if they are related to each other, then the transactions which happen between them, they are called the related party transaction. If they are related party transaction, there will always be a chance or interest of the multinationals. And by the way, just to mention that close to about 65% of the transactions in the world happens through the multinational corporations.
Right.
So there is a good chance that they may either lower the price of the purchase or make or lower the price of the sales, depending on which is more convenient tax jurisdiction where they want to park the profit. And that brings a little bit of challenge, because the countries may lose their reasonable tax or the tax which is due to them through this kind of pricing. Transfer pricing rules under the tax statute corrects that kind of transaction pricing and make sure that the profit, whatever is required, is saved in there in that tax jurisdiction or oblique the country. Then the mechanism is there for how do you calculate it, etc., etc. But that's the basic philosophy and rationale for bringing transfer pricing regulations.
Two entities who are related have a certain, because it is a relationship, they have a certain control over each other, and they can, with the use of sales and purchase invoicing, they can transfer one cost from a jurisdiction which is in terms of tax, which is with more tax rates, so they can transfer that to another. Yeah. So it is basically shifting profits to jurisdiction which has lower tax rates.
Yes. I mean, the objective of the country to bring the transfer pricing regulation is to safeguard its tax base,
right,
and discourage the profit shifting out of this.
Yes.
So it is about the safeguarding the tax base, and thereby, and to do that, they have to adjust the pricing as per certain methods, and that is what is called transfer pricing regulation.
Where did it all start? Where transfer pricing came into existence, or which is the body or some regulations that started this whole thing?
It all started with many years ago. First important regulation came by the OECD. OECD brought those regulations when the tax treaties started getting signed. And they realized that, and OECD is the association of all the rich countries, developed countries, and they started it. And then subsequently, much later, UN, which is which has all the countries, adopted. So then at the moment, in the world there are two kinds of guidelines. Right. One is the OECD transfer pricing guidelines. The other one is the UNTP manual for developing countries. And there is a big difference between the two. OECD, because it's a rich countries club, transfer pricing guidelines, which is the OECD is following, is coming out of the OECD tax convention, right? Mm-hmm. And definitely they would have an interest in safeguarding the interest of the rich countries.
Right.
UN, on the other hand, safeguards the interest of the developing countries, and that's why many times you will find that the countries like India or some other developing countries, they would, while the laws would be of OECD and methods will be of OECD, and UN does not disturb that, but the approach to the transfer pricing is through the UN guidelines.
Okay.
UN practice manual, or as we call
So
it.
two organizations give some, ideal frameworks to
Yeah.
work around. So countries, they use the guidelines, but they do not have to
Yes.
make it as exactly as that has been put forward by OECD or the UN. But they use as a framework, as a foundation for their own countries, and they use it as per their requirement.
Yeah, both are considered guidelines and practice manual. So they are a good way to move forward, but you may or may not agree with either,
Right.
And you could develop that, which is what happens after a period of time when the transfer pricing comes into, and there is a considerable amount of experience in the country. They are confident and they can chalk out their own path to transfer pricing.
Any country could use a piece from one, a piece from another, but there is no certain regulation that you just require one framework to be brought in.
Yes, there is no requirement of that.
Right.
But then let me also say that it is in the approach. But as far as the methods are concerned, they are almost akin, right? So methods being almost the same, it is just that the approach is slightly different.
When we are talking about transfer pricing, what are some of the things that a country or the regulators first look at when they are trying to regulate this market or the transfer pricing rules? What are
When they are trying to implement those transfer
right.
pricing rules.
Right.
First thing first, what are the transactions? And as I said, that transfer pricing rules are two kinds. We are talking here the international transfer pricing rules, right? And they are about cross-border transactions between the related parties. Now there is a considerable, there is a definition of related parties, which may differ between the countries. India may have some, US may have something, Canada may have something. So definitions may vary, although the basic content of those definitions will remain where they are. Okay,
Right.
so they will be about control, management, those kind of things. Transactions between the related parties. So the starting point for a regulator, for the tax department, is the transaction,
Right.
international transactions. What those transactions are, what is their value, and for that they would have a reporting mechanism. They would have a form through which you have to file those transactions. And once you have done that, then it's about which are those transactions, which are the related parties. Then they are about the pricing mechanism, and there are 4 or 5 methods. There are 5 methods, UN and OECD both have that. And then you can use those methods on the basis of comparison, what we call as the comparability analysis. And this the fulcrum or the terra firma of that comparability analysis is the functions, asset and risk analysis. Functions assumed, risk assets used, and risks employed. So you have to, or assumed. So you have to look at the FAR analysis first, then based on that, because I can't be comparing mango with apple.
Right.
Right? So the FAR analysis, that this is my transaction, which are the other transactions which are happening with a similar FAR analysis, functions, assets and risks, which allows to compare the transactions. And this transaction which is being compared has to be within independent parties.
Right.
It cannot be with the related parties. Now, absolute independent transactions sometimes could be difficult.
Right.
Because multinational transactions are of a different nature. Domestic companies may or may not employ that kind of transactions. Okay, so what the governments do, that they define the related party transaction in such a manner that up to this, let's say, just an example, shareholding pattern would mean that it is a unrelated party. Beyond that, it will be considered a related party. India says 26%, US says 50%. So there are different definitions, as I mentioned. And that comparison is called the comparability analysis between the this transaction and the transactions which are happening between the independent parties. And when you compare that, that determines that the independent parties are doing it at that particular that particular value. So by comparison, this transaction will be considered to be at that value as an arm's length price. If there is a more or less, then there are adjustments.
Right. So just to use an analogy, let's say if I'm selling a candy to my brother, if I get 10 rupees, but if I was selling it to someone else, what would I expect to get? So that would be a comparative analysis, if I may, right?
Good way.
Yeah.
But transfer pricing does not recognize the blood relationship.
So the relationship in terms of control.
Yes.
Control of the companies, control of businesses.
Management.
Right, management. And you have experience working in transfer pricing for Deloitte in India. You have worked in transfer pricing in India for quite a long time, and you are here in Nepal, and Nepal is also now gearing to implement transfer pricing rules. What are some of the learnings that you bring to Nepal, and you suggest Nepal to implement to make their transfer pricing regulations more useful, and also help because it again comes down to implementation, the compliance falls with the taxpayer. So how can the taxpayer be helped to actually abide by those regulations? What are the learnings that you bring from India?
According to me, the transfer pricing act or the provisions should be there in the act.
Right.
Whatever is the income tax act, you should be having that. In Nepal, the way it is being done is that there is an enabling provision there, and then they have put some aspect of that in the rules. Right. So the act relevant section is section 33, and the relevant rule section rule is rule 15. But when I look at the act, it does not talk about the related party transaction. Which transaction can get covered under for transfer pricing analysis?
Right.
Who are the related parties? What are the methods of transfer pricing? Right. If somebody does not does not file the details of the international transaction, then what kind of penalty or what kind of monetary impact it will have on the taxpayer? Suppose it delays it beyond a prescribed date, then what happens in that? So all these things are very, very important, and they should insert that in the act itself.
Right.
Because transfer pricing act and rules are meant for getting investment in your country.
Right.
They are for telling sending a signal to the multinational corporations that you see, I have these rules for related party relation, and or for transaction or for method, and please come and invest in here. Right. I mean, these transfer pricing rules are not being brought in for any other reason. Right? It's for investment. So that's number one. Number two, in the rules, as I saw, and I may be slightly incorrect also, but as my memory serves right, they only mentioned one method, cup method, comparable uncontrolled transaction method. Now, price method, then that is also not correct, because there are 5 standard methods adopted both in the OECD and in this, and that should be said that these methods should be mentioned in the act rather than in the rules. Right. Rules are subordinate legislation, and they are to actualize the act. But rules by themselves cannot be bigger than the act.
Right.
Then the third part, and I understand that they are preparing transfer pricing guidelines. Yes, that it should be very detailed guidelines, and they should put it out for public consultation, so that the chartered accountants, the practitioners, the businesses, they also give their opinion on while the rule and act that will at least the act will get passed in the parliament. Right. That has to be voted, and because that's the supreme legislative wing, and the rules can be brought to actualize the act, and that could be a subordinate legislation, but the guidelines should be done through a consultation because it's giving more clarity on the act and the rules, and that will be a guidance note for the taxpayer and for the practitioners.
So,
And similarly, ICANN, your a regulator, chartered accountant regulator, should also come out with a detailed note with the business models, with how do you, in a particular situation, look at that for the chartered accountant.
Right.
So that, according to me, will fulfill most of these parts on the act and rules and the regulations part. Apart from that, they should also bring, while bringing the act and rule, the provisions of safe harbor rules,
right.
the advanced pricing agreement rules, etc. I mean, this should be part of the act because these are the dispute prevention mechanism. Because typically, worldwide, a lot of disputes get created, tax disputes get created between the taxpayer and the tax department, largely because of the multiple reasons. You know, the method is something which the taxpayer prefers, the comparable that the taxpayer may or the practitioner may prefer. So those could be the reason. So it is very useful that all these things are done, and a dispute prevention mechanism, not that disputes get generated, then obviously it is going to take a lot.
Right.
But if it is there are mechanisms available to prevent the dispute, that will help Nepal. These are the two things that I'm looking at.
Acts are supposed to show the vision of what transfer pricing is. Someone coming to invest in Nepal wouldn't go into regulations firsthand. They'll look into the act, whether regulations for international transactions, international relationship between companies exist or not. And then they'll go into the granularity of things. So the act must give the bigger picture of what we are trying to do. And
Not
then
the bigger picture. All these definitions properly mentioned,
right.
so that there is no confusion. Right? These are substantive portions of the law.
Right.
What can be done through an act cannot be done through the rule.
Right.
Rule have its own place. Guidance note has their own place. But what you can't substitute the deficiency of the law through the guidance note. Right?
Right,
That
yeah.
is what I want to convey.
You also talked about ICANN, that they should also give consultation to the government and also help get their members ready for transfer pricing regulations, help them implement those regulations. And you also recently visited the Ministry of Finance here in Nepal. You visited the current Finance Minister, Mr. Vishnu Paudel. What suggestions did you give him, and how did that conversation go?
We talked exactly these things.
Right.
Apart from, he also wanted to know what should Nepal do for raising the revenue. And I did say a few things about improving the tax administration, getting the info. You have multiple agencies within Nepal
Right.
collecting information. You should have a database, prepare a comprehensive database in the finance ministry and with the tax department, which all the database should come there so that they can be utilized by the tax department, because the multiple leakages happen if the data is not at one place.
Right.
That's the one thing which I said. Then the digitization of the tax administration procedures, be it from the VAT side or the direct taxes side, should happen. Dispute resolution should definitely be created, and to give more comfort for the MNCs, you should have some thoughtful way to and not subject them to the long winding dispute resolution path through the tribunals and the courts, and create some other mechanism by which you can give them a kind of better rule. And those kind of things basically are there to attract the MNCs, give them more confidence that if they come here and they have any dispute, how do they resolve that? So that kind of thing should be there. There were other issues on public finance like debt, etc. So I said, of course, the prioritization of debts are important.
Right.
ABC analysis of which debt can be prioritized and which debt cannot be prioritized. So those are kind of discussions. I must say it was a very nice discussion, spread over 25-30 minutes. and I felt that he's a very, very uh, nice person, interested in reforms, and very keen, uh, was very keenly hearing whatever little I had to say to him.
Right. So I think you were quite, able to provide clarity to the government that there needs to be clarity on the regulations from starting from the act regulations to guidelines, and also you have clarity of the regulations, what rules apply, and when there are disputes, you should also have clarity how those disputes will be resolved.
Yes.
So those are the things that you suggested to the finance minister. So thank you very much for your few minutes here. I'm very grateful, and we also look forward to having you back here, and when Nepal is implementing, and also when we want more granularity on the subject, I think you'll help us by gracing us and helping us expand on some other key issues. Thank you very much.
And thanks for inviting me on this podcast. Thanks a lot.